Welcome to the Phoenix Prosperity Podcast, where wealth meets legacy. Join your host, Tim Fergestad, as we explore the journeys of Phoenix's finest to success and beyond.
Hello, everybody. This is Tim Fergestad here in Phoenix with the Phoenix Prosperity Podcast, but we're switching things up here a little bit with my good friend Dave Dubeau. We're going to reverse roles, and he's going to host the show.
Well, I'm going to be asking you a bunch of questions. You're going to be giving me a bunch of smart answers there. So, hey, this is a monthly update. So we're here with our good friend, Tim Fergestad. As he mentioned, he's from the Phoenix Prosperity Podcast. What you might not know about Tim is he also has a company called Oak Street Assets. And Tim is a very, very accomplished professional real estate investor. So that's what we're going to be talking a little bit about today is Tim and what he's up to in real estate. So, Tim, for folks that aren't familiar with what you're doing, can you tell us a little bit about the kind of markets that you own properties in and where you focus on buying these days?
Sure. The bulk of what we do is not unlike most real estate, where we focus on growing markets. Particularly, we look for quality job growth, right? And so historically, for the past 8 years, that's been the Sun Belt. The problem with that is that the developers got all excited and built a ton of stuff, and so that wave of new inventory hitting the markets is crested and is dying down, thankfully, and which is something we're very, very excited about, actually.
I think there's going to be lots of opportunities coming down the pipeline, that's for sure. So, Tim, again, for folks who don't know about the real estate side of your business, tell us, what does your portfolio currently consist of as of July 2026?
Okay, sure. Just a quick background for people who may not know. I PhD in neuroscience, right? Nerd. I semi-retired and started investing full-time years ago and had to educate myself on what are some good assets. I fell in love with real estate and owned single-family rentals and fix and flips and others.
Did the normal stuff that a lot of guys do when they get into it. Yeah.
Yep. And ultimately scaled up and realized how awesome that asset class is. And for returns, for security, for diversification, all that stuff. Got into bigger projects. So right now we currently have about a dozen. Most of them are multifamily value add. That's kind of like flipping an apartment community. You can't do it as quickly, right? You can't like buy a house, maybe renovate it and sell it in 3 months. There's people living in there, right? They have leases, and it takes time to do it. 18 months is kind of the quickest we've ever done, but usually we underwrite for like a 3 to 5 year project hold period. So pros and cons of real estate in that sense, but most of it is in Tennessee, Texas, Arizona. Flipping up apartment communities, making them better, safer, cleaner, nicer, adding value to the community and for the tenants and to our investors. And that's kind of our bread and butter, is what we call multifamily value add or apartment syndications. I'm a general partner on a series of townhome build-to-rent communities we're building here in the Valley as well. Also affecting the workforce housing crisis in the U.S. The affordability gap is really legit still. It's almost $1,000 a month cheaper to rent a place of the same size than it is to try to own it right now. So, and people love like this product. This build to rent is not like those little houses all in a row. These are townhomes. They're 3-bedroom, 2.5 bath, 2-car garage townhome. They're vertical. There's nobody above you, right? You have a yard. It feels a lot more like a proper home, but it also has like amenities like a clubhouse and a pool and things like that in the neighborhood, which is nice.
Yeah, very nice.
So kind of a mix of things. We also have a debt fund too for people who don't want to do that, don't want long-term stuff. They have their money just sitting in a savings account or something terrible, or CD. They can put it in this, get over double the returns, and still have access to it if they want it.
All right. So you're involved in a few different things, but the bread and butter for the last number of years has been buying slightly run down apartment buildings and fixing them up and rehabbing them and getting higher rents and higher values for your investors that way. That's kind of the bread and butter. Okay, makes sense. So you're involved in about a dozen different projects at the moment, Tim. So over the last month or so, what's something that's kind of popped out for you from that? Is there anything interesting going on in the portfolio right now?
Yeah. Last fall, we acquired one in Texas. That one's going well. We just this spring, a couple months ago, we acquired another one here in Arizona. This one's in Tucson. Partnered with Gary Lipsky. He's a great operator down there. This is his 12th deal down there. I like to partner with different people on different projects to provide diversification and different asset classes and geographical diversification for my investors and myself, right? This is kind of how it started. And that project we took over a couple months ago is going great. Something that's unique about that at the moment is that we're using, well, I guess it's cathode protection and water treatment to fix some of the plumbing issues. When some of these you buy, this is an 80s vintage property. A lot of the older ones had cast iron, which is a real pain, particularly when there's leaks under slab, right? And you got to like tear up the building and stuff to fix it. This is copper, and which is offers some other alternatives, including water treatment to fix the leaks, and you can actually reverse some of the leaks we're getting, and we're trying that on that property right now, which could save us over $500,000 on our capex. Yeah, so it's a legit savings. The Navy uses it. There's a lot of multifamily operators who've used it with success. So that's something we're implementing right now, and it's science. It's great, right? You're just reversing the flow of electrons, right, to the copper. So it strengthens and not basically dissolves in the ground.
I can see the science nerd in you just lighting right up there.
Right. But that's that's going to potentially save us over $600,000 on the project, which is passed right on to the investors. So that's awesome.
Okay, so this is the project in Tucson, is that?
Yep.
I understood that correctly.
Yep.
So you mentioned Tim that you like to get involved with different partners in different areas and different expertise. So you've got a group of investors, you bring your own capital, your investors' capital to the table in these deals.
Yep.
What else is your involvement in these properties, Tim?
Yeah, I get that question a lot. It really depends on the project.
Yeah.
Sometimes they need me. They want my help on sourcing it, underwriting, due diligence, checking out the property, the asset management, bringing in investors so we can get enough capital to execute on the project. Sometimes I'm just a fund manager. I invest with my network. The people who want to invest in this deal, I share it with them and educate them on what's available and give them access to it, which normally they wouldn't. And we negotiate better economics, and they invest alongside me. Then I just manage us separately. Sometimes I'm a general partner, and I have more hands-on roles on the project. So it varies by deal. Mostly I'm a general partner on these deals, but sometimes I'm a fund manager as well. So it's a mix.
Okay, very, very good. So you've been in and around real estate for quite a number of years now, Tim, and you've learned a lot. You've gotten yourself a lot of education around this. What's something that we can kind of take people through that you can teach them from your experience about?
Well, I guess the most important thing I think is that it's more of a bet on the jockey, not the horse type of investment. A lot of people,
what do you mean by that?
Yeah. So what I mean by that is they often go, "Oh, you have a deal. Tell me about the project. Tell me about the property." And that's kind of the last thing I should, in terms of order of importance, because a bad operator can ruin a good property, right? So it's more important.
Well, so for folks that haven't invested in real estate before, tell us why that's such a big concern.
Sure. So experience is paramount, and people who you can leverage their expertise. That's one of the great things about this is we can team up together. Some people can just bring some of their capital. Other people bring their knowledge and their time and energy to implement the business plan and add value. And there are market forces that are really important as well. A good operator will generally not be working in a bad market. They know the difference. Right. And they also pick good properties and other stuff like that. But I've seen good properties be ruined by bad operators, but I've seen great operators save bad properties. Right. So ultimately, you want to bet on the operator, who's on the team, what's their track record, things like that. Then where is the property? What market, submarket is it? Then what's the story with that individual actual property, right? Okay. In that order. And most people have it reversed. They care mostly about the property itself.
Well, which makes sense, right? I mean, logically, it kind of makes
Sure.
sense. But what you're saying makes complete sense. So again, for folks that are in your world, Tim, how did they kind of vet the operator? Because they're looking to you
Sure.
as the guy with the connection. So what are you doing to vet operators that you're working with?
Right. Well, a lot of it's networking. A lot of these people are not available through other means, right? They're relationship based. It takes time. We had one a project in Waco, Texas. Rockstar operators, they're vertically integrated. They have their
What
own
does that
property.
mean? Yeah.
They have their own property management, construction management divisions in their bigger company. They don't want me coming in and trying to mess up their systems and trying to help out. So that's where they're like,
Right.
you can be a fund manager. We don't want you as a general partner. That's one of those situations. But they have 140 deals, right?
Wow.
And throughout the country, they're pretty dialed in. They have an incredible track record, right? And that took us probably 2 years to develop that relationship in order for them to let us partner with them.
So it
And
was almost more like they were vetting you than the other way
oh
around.
yeah, oh for sure, yes, yep,
Okay, so when you are vetting an operator, or let's say somebody's listening or watching this and they're thinking about looking to do deals with operators, what are some quick tips that you can give them about vetting and finding out if somebody's good and if their team is good or not?
well, obviously track record is an important one. Communication is paramount
So,
in my
well,
mind.
track record. So, how do people know what the real track record is? Like, how can you? People are going to show you their best faith. They put the best foot forward. So, how do you dig down and find out what the real track record is?
Sure. Again, a lot of that's networking, right? Once you're in the industry long enough, you start to know who's worked with who in the past, and you can all talk and exchange
You can have
stories and
some
insights.
real words over a couple of beers or
Right,
something like
right.
that.
Somebody has a testimonial on their website from their mom is not the same thing as a bunch of independent third-party seasoned investors, savvy investors who have worked with lots of different groups. And so it takes time. It's they're private, right? It's not a public company, so
Yeah.
it's a sweet spot where you can get better returns, right? Because they don't have as much overhead. They don't have all of the public SEC requirements. But right there, yeah, to your point, because there's not as much oversight, right? There's potential for there's more risk potentially.
Right. Okay. So, networking, asking about people, any other ways that folks can kind of do due diligence around operators?
Um, sure. There. I mean, going to events. The key to all this stuff, though, is it takes time, experience, and so most of my partners and investors don't have the time or energy to do it themselves. That's why
Right.
they come to me. That's why a lot of what I do. That's what attracted me to this in the first place as well. Is it was great returns in a great asset class, but it was passive, right? And people joke that real estate is not passive, right? Well, no, when you own it and you have to go, unplug the toilet at 2 a.m., that's not really passive. But when somebody else is managing the property, it's pretty darn passive. And
Right.
it takes know-how and time and energy and experience. And what's great about this is sort of the short path, the easy button to start investing in real estate and start learning. Because you can like I did, right? I invested in other people's deals first as a limited partner passively. I was doing my own stuff actively, and I started realizing, whoa, these are way better than the stuff. The return on my time and energy and money is way better on these bigger projects because of scale and other things.
Right. Okay. No, that makes a lot of sense. Very good. Well, let's take a look at do a bit of a deep dive in one of your properties right now, Tim. So which one do you want to focus on?
Well, I don't want to focus on East. So we've had a couple of disasters in Tennessee. Not nothing
We call those learning experiences, huh?
horrible. Yeah. Like one of them is great property, east side of Nashville, and one of the buildings burned down. It was 20 units. We just renovated them too, by the way. But that one, thankfully, nobody was hurt. Almost, there's a crazy story there.
What
The
happened?
like one or two units on the end were not damaged, and when the firefighters were all done and they were waiting, the smoke was going off. A kid walks out of the end unit who his mom had said, "Stay here, don't leave." She went to the store or something like that, and they thought they'd cleared the whole thing or whatever, but they managed.
Wow.
Yeah, yeah, that was pretty wild. But we had insurance, and we actually got a new building at a discount, so we added value. It was actually a significant deal and benefited our investors in that one. Granted, it was a huge pain in the butt for the general partners to deal with for a couple of years and all the insurance and stuff. But we just recently in February, I don't know if anybody remembers, this is 2026, there was an ice storm through the middle of Tennessee. And sure enough, one of our properties in Nashville, this one was on the north side, got hit. And it's a 200 some unit, 206 unit property that had roof damage, leaks, busted pipes, and over 60 units were down. We have insurance for that, right? For lost revenue and for fixing the building and stuff, but it's a pain in the butt to have to deal with that sort of stuff. Thankfully, the staff on site were really good. They were able to put people in other properties and stuff in hotels really quickly and bring in emergency services and give them everything they needed, like water and restrooms and stuff, as portable units, but also great asset management team and stuff that working on the renovations and stuff. So that's why it's really important that you partner with people who are competent and communicate well and so forth.
Yeah, no, that makes a ton of sense. So, Tim, we were talking a little bit off camera about something that's kind of caught your attention these days, and it's the impact that you're seeing AI have on
Oh yeah.
the economy, but also how that's going to trickle down into real estate. Do you want to tell us a little bit more about that?
Right. It's a wave of serious impact coming. You can get crushed by it or ride that wave, right? And I'm trying to position myself, right, and my investments to ride that wave and to take the best course of actions now for what's it going to be like in 5 years, 10 years, right? Right now, we're seeing it affect white collar jobs, and it's going to continue to for a while. Income. Historically, we transitioned into an income economy over 100 years ago, and it's been shifting slowly back.
So, sorry, what do you mean by income economy as opposed to what?
Well, back in the day, you ate what you killed, right? You would trade and barter and so forth. With industrialization, people started to go get jobs. They go, right. They left the fields and went into the factories, and you grew wealth through owning things, and that's becoming more and more the playbook for financial independence and security. Because you're trading your time for money, in an income economy, and the future is an asset economy. The people who are selling the picks and shovels during the gold rush are the people who come out the best. It's kind of the same right now. The people who are providing chips and energy and the infrastructure and have the physical, real, tangible assets, like the space to hold the data centers or the space to create the manufacturing, to build all the robots, which is the next wave, right? Which is just crazy to think about. But last I heard, Tesla was planning to have 1 million robots by the end of 2027. That's like in a year, right? Wow. And then I think in 2 years after that, it was over 10 million. And 2 years after that, it was going to be over 100 million. And it sounds crazy, but when you do the math, because it's like 20 grand, right? To get a robot that can do this stuff, who can be, and they're getting so good. It's like, if you finance it, it's like $300.
So these are going to be
$300 a month to have
robots that are going to
robot
come clean your house, kind of thing, or
they can
work in factories.
They'll be a Michelin level chef. They'll have access to thousands of recipes. They can do your laundry. They can mow they can do all that stuff. They can work in all the factories. They're going to be in several years. There'll be more incredible robotic surgeons than there are actual surgeons. It's impacting all sorts of different industries and fields. But my point is when you finance it over 5 years, a $20,000 robot is about $1 an hour.
Yeah.
Labor costs are clearly the most expensive things in most workforces right now, or industries. that's a no-brainer, and that's why it's going to scale so fast, because demand is going to be, there'll be robots making robots, and it's jobs for white collar and blue collar at that point will be very different, and the people who own assets, real tangible assets, are going to be in the best position, and that's why
I wonder
real
how
estate
people are
falls
going to
in
be
that
able to afford
category.
to pay the rent at that point.
Well, that's we already have systems for that, and I think those existing systems will grow, right? I think welfare or housing subsidies, Section 8 in the U.S. here, low-income housing tax credits for different developers and stuff. All that stuff is probably already in place, probably going to grow. I think a universal basic income is going to lean that way. Yeah, it seems to be the natural progression for it. And so trying to position our assets to be in the right spot for that. But people still need a place to live. They need to, right?
Yeah.
And so I think real estate is one of those tangible assets that's going to fare the best in this situation. Data centers and other stuff, they're moving a lot of that into space, actually. So which is really cool. It makes sense. It's cool, abundant energy, that we want the satellites for data stuff out there anyway already. So I don't think there's been a big boon here on Earth for that, for energy and water and cooling and all that stuff. But I think that's already starting to crest. Yeah, it's housing. We all need somewhere to live. All right.
Yeah.
And so that's why
so will the
real estate's
robots.
a great asset. They'll need somewhere to charge up, right?
All right. Well, that's interesting, scary thoughts to ponder for sure.
It is, but I have a blog series on this I'm writing. It's the pivot into more of an asset economy and what that means. And so that's on the website. I'm continue to work on that and add to it.
Very cool. So as we're wrapping up here, Tim, we can tell that you're very passionate about real estate. You come from a science background. You're an analytical kind of guy. You like to kind of look at where things are going in the world and with the economy and with real estate. What else do you do for fun outside of real estate and work?
Yeah, well, this week it's summer here now in Phoenix, and it's hot, and I have to I have to on the list for this week is maintaining the orchard. I have a little citrus area and some raised planter beds and stuff. I have to make sure that all that's functioning to survive the heat, but then also prep the boat because it's fun summertime. It's time to go play in the water, and I got kids who want to go take it out. It's mostly play up in Lake Pleasant, drag people around on the wakeboard or tubes and other stuff, but nice. Get out and get in the water.
Did you say you got kids that are still enjoying that kind of?
I do. That's why I got a boat, so they still keep Dad kind of cool and let me hang out with them a little bit.
How old are they?
16 and 19.
Okay, yeah, good ages for the boat.
Yeah, good stuff.
Glad they're still letting Dad hang out with them. Well, Dad's going to pay for the gas, right? So.
Yep.
Awesome, Tim. Well, this is great. Well, hey, if people want to reach out to you, connect with you, what's the best way for them to do that?
TimFergestad.com goes to my link tree, which has a lot of good stuff and resources on it, but also OakStreetAssets.com.
Perfect.
It's tons of stuff there. And social media. I'm everywhere.
You're all over the place. Yeah, there aren't too many other Tim Fergestads, that's for sure.
Nope.
So, Tim, thanks very much for the update. Look forward to our next one.
All right. Thank you, Dave. It's been good.
All right, everybody. Take care, and we will see you on the next one.
Inspired by our guests? Visit PhoenixProsperityPodcast.com/guest and join us on the show and share your success story with Tim. The spotlight awaits.